following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, let's talk futures here. Very special guest from Ireland, of all places, place I haven't been to yet, but I'd like to come to. We have Créde Sheehy-Kelly, not only a trading coach, but also an trading psychologist, but also an athletic one as well. How are you?
I'm really good, thanks. I'm so happy to be back. Had a blast last time, so looking forward to our chat.
Well, we learned a lot last time for sure. I mean, it's great. There's not a lot of you out there, right? So, we have Dr. Gary Dayton who comes on the show sometimes. He's been in this in this psychology sphere with us for a long time. We found you, thank goodness, also, but it's kind of rare to find someone with your talent.
Oh, well, thank you. It is a very small niche, to be fair. There's a lot more sports psychologists than performance psychologists who operate in the trading space, I think. So definitely the trading niche is a super small one for this type of work.
Yeah, for sure. Well, and sports is a bigger thing, right? Every kid, every high school kid, every grade school kid, even in college, that's a big target market.
Yeah, for sure. And I think it's quite a popular thing to study as well. There's a lot of people coming up. It's interesting, in Ireland, there's not a lot of jobs in it. So there's a lot of people studying it, and then they're kind of trying to figure out where to take it. So I guess being able to apply it in those different performance domains is really useful as well.
Yeah. And so it's, there's so many more, and I'm going to characterize it as retail traders flocking to the futures markets and in other tradable assets as well. That it just seems like the universe just keeps growing and growing and growing. I mean, just look at the volume in some of these markets. They're just astronomical.
Yeah, I definitely think that's what I've seen actually over the past few years. So I only actually, well, not only, I mean, it's been about 5 years now that I've been working with traders, but in that time span, it's just exploded. There's just more and more people wanting to learn it. And I think one of the things that I keep hearing anyway is that people want that freedom. Like they don't want to be working for other people. They want that autonomy. They want to be in charge of their time, no cap on their salary. And trading seems like the perfect thing to do. But I guess that sometimes people maybe underestimate the amount of skill and practice and effort that actually goes into becoming consistently profitable and turning it into a full profession.
Right. So that was going to be my question, but I think you just nailed it. It's like, all right, I want to do this. I want the freedom to do, to be my own boss, right? I want the freedom to, kind of define my trading hours and what I do, and I have an unlimited upside. And they come in with that mindset, and maybe they don't realize how hard of a job it really is.
I think that's what I've definitely seen, or even the stories of traders who are maybe a few years into the journey, and they'll say that at the start, they'll admit it. When I first started trading, I thought it was going to be this, and then I quickly realized it wasn't. But I guess when people are working with me, they're at the level where they're taking it very seriously and they're willing and motivated to put in the work to get the results. But I guess you could say that about any profession. Like there's, with online coaching is another area that's exploded in the past few years. And obviously I'm sitting on the other side of the fence of that being an online coach. But, there's a lot of people who think that getting into that space as well is really easy. It just comes easy, you make money. And, that's not the case. I think in anything that requires skill and expertise, it takes time. It's, you wouldn't become a lawyer or a doctor in a year or expect to have that type of a salary, like a full professional salary after a year of studying it. And I just think it's the same. You need like miles on the ground, whether it's trading or coaching or whatever it is, you do need to be in the arena and be kind of figuring it out as you go along and studying it and all of that to get the results like that. But I think that when people do put in the work, it's a phenomenal, like trading is a phenomenal way of making a living for sure. And I've seen a lot of people who really have an excellent lifestyle because of it.
Yeah, but it's hard. I mean, no doubt about it. You know, you talked about doctors and lawyers and stuff, and they have a thing called continuing education, right? So every year or two, they have to take another class to kind of get them up to speed again. Maybe there's some new techniques in their profession. Here, it seems like it's always continuous education.
That's actually such a good point. And it is even actually, you know, as a psychologist, we have that as well, CPD, all of that. But it is true. There, you never stop learning. I think that's true in any profession. But particularly in trading, I think you keep getting hit with hard lessons and then you keep having to learn. And then as you get over that lesson, so say it's a big loss or something, you increase your skill set in terms of being able to deal with the loss. And then that goes into your bank, your skill set, and then you take that to the next lesson. And it's kind of like growing through reacting and having to get over difficult challenges. And that's really what cultivates you into being an excellent trader.
So let's tippy toe into the idea of how to deal with losses by let me just give you a little bit of a history from my point of view, because I was a retail broker for a long period of time. And a lot of folks would get right away, they'd get a free 30-day, simulated live trading account. And they would do well. And then they're like, all right, I'm going to fund this account. I've got this thing nailed. And then they go live with real money and they don't have such an easy time anymore. And they experience their first couple of losses. And now they're starting to second guess themselves.
Absolutely. So, and what's happening there is actually pressure. So it's like, if you haven't worked on the mental and emotional side of trading, you can probably get a certain amount of the way, it's not going to show up. But once you dial up the pressure, any cracks in your psychology are going to just show up really clearly. So that the length of time or how long it takes for the cracks to show will differ depending on the person, but it's inevitable. At some point, the pressure is going to increase, whether it's going from, being in the evaluation to actually getting the past account, or whether it's increasing size. There's always going to be a juncture where the pressure just increases to the point where if you haven't worked on your psychology, it's going to smack you in the face. And I think that's a really common challenge that people experience, is when they go from being in the evaluation and then they make it, and then any range of different challenges can hit them. So sometimes people have a tendency towards self-sabotage, and that shows up when they're succeeding, which is something that actually, it sounds counterintuitive, but it's really common. Or they just, they can't deal with the losses. They expect themselves to be, now that they've made it, they've got the past account, they have a perception of themselves as a certain type of trader, and then taking a loss undermines that confidence in themselves. And then they have to figure out how to, reset from it. So I think for me, handling losses is one of the biggest challenges and the biggest skills that you can cultivate as a trader that will stand to you over the whole course of your trading career.
Yeah. So trading behavior changes from sim to live. And so what I like to challenge most newbies to say, hey, trade your real-time sim account as realistically as you possibly can, right? Don't over leverage, don't get reckless, don't, do things that are outside of your rules. And it's still hard for people to do that.
Absolutely. And that's actually something key that, sports psychologists, trading psychologists would teach as well, is that on sim, and a lot of people don't get this maybe, that exactly like you say, you have to treat sim as if it was live, because you're actually practicing the habits and you're trying to embed a certain way of trading, get it really strongly embedded into your psyche. And if you're breaking your rules on sim and you're thinking, well, it doesn't really matter, or you're using bigger size because it's sim, then you're actually, you're not practicing what you need to be practicing for when you're trading live. So straight away, if you're treating sim differently, you're going to end up with a problem when you trade live. But then you can flip that and say, you can use that to your advantage. So even one thing that I used to do with sports teams actually was try and cultivate as difficult circumstances as possible in practice matches or in training sessions by introducing forfeits, so that you could actually practice dealing with pressure before the consequences were too great. So that's something that even traders could start doing. So the first step would be to do exactly what you're saying. So make sure that you're following your rules, you're, trading with the same size as you would be trading when live. But then also you could even create arbitrary sort of, self-created conditions of pressure. So whether that's you have your own forfeits for yourself, but I would align them with your following your process as opposed to P&L results. So it might be, if I stick to, you know, executing my plan to 90% or above, that's great. If I can only do it to 50% or below, I introduce some sort of forfeit, like I donate money to charity or whatever it is.
Wow. Okay. So you put a real consequence on, I don't want to say bad behavior, but you know, stepping outside of your plan.
Yeah, exactly. So you're conditioning yourself to follow your rules even before there's a big risk to your money in the market. So that, you know, that's now kind of maybe a more advanced level of psychology. There's some basic stuff that maybe should be put in place first. But if somebody was trading on sim and they really wanted to prepare themselves for that increase in pressure, which is significant, then you could start doing things like that just at the point where you're wondering, should you go live or not?
Well, so could that forfeit be, I'm trading in sim, I just violated my rules, I got reckless, I'm done for the day. I'm not I just, you know what, I'm going to forfeit the rest of the day, the rest of my experience, and I have to wait till tomorrow before I try again.
So actually, that's really interesting. And I can see where you're saying it. That's one thing that I would not tie to a forfeit, because you don't want to be denying yourself the opportunity to be getting experience trading in the market. You know, however, sometimes people can have a rule where if I lose three trades in a row, say, that's my point to stop trading for the day. But that would be thought out well in advance of that happening. So it'd be like a what if scenario. So that's, again, something I do with people is write out all of the different scenarios and the kind of trigger points that, let's say somebody knows that if they take 3 losses in a row, it sends them completely on tilt. Well, then for that person, having a rule that after 3 losses in a row, you stop trading for the day for the moment until you're building your mental edge and making it stronger, that would be a very practical, useful rule to have. Whereas the forfeit is something that's more to just increase pressure on yourself, but in a light, fun way, not, you know, not increasing it where you're feeling anxiety in that. So that's why I'm saying something like having an arbitrary amount of money you give to charity, or it could even be doing something like, you know, 5 press-ups, just something that signals to your brain that there is a consequence to this. It's not just sim and monopoly money. And again, you can't probably recreate the very realistic pressure of trading your own money or someone else's money live in the market, but it's just dialing it up a little bit. So there's some sort of transition ramp as opposed to going from sim where there's no consequences to live where, you know, it's all on the table.
Right. Unfortunately, there's, you know, a lot of folks just take a shortcut because they have confidence, right? They have this, I don't know if I'm going to use this word correctly or not, but this belief perseverance that they're going to succeed because, you know, we've had 2 days on sim. I'm the greatest trader in the world. This is easy, right? And then they just, boom, 2 days later, fund in an account.
Absolutely. And that's understandable as well, because confidence comes from results. So if you're trading on sim, it's going well, you're seeing results, like why wouldn't you feel confident? But I think it's, and maybe also with that slight hopefulness, optimism, naivety at the start of trading, where you think, you know, yeah, I can be doing this in a year, I'll be consistently profitable and replacing my salary. Those two things combined, if you don't pair that also with the foresight of understanding what that transition is going to be like and what the potential impact is on your psychology, if that piece is missing, then of course you'd go confidently into trading live and expect it to be the same. But if you can take that time to actually understand what that increase in pressure will do to your psychology and then put things in place to mitigate that, you're going to be in a much better position.
So let's take that to the next level. Let's say, all right, I'm finally ready to trade real money. I'm going to fund my account. And I have some risk capital, right? Let's say I have enough risk capital. Does it make sense to say, all right, I'm going to start trading with like a smaller size contracts, like micros versus the classic, the bigger size contracts? Or is that trader kind of selling themselves short a little bit, and they say, all right, we could go with the regular size contract because pricing is the same, and you know, I have, you know, a little bit more risk capital, and I've built up my muscle memory from the sim trade.
That's yeah. So what I actually recommend to people is that they have a phased approach to scaling up. So I actually have a YouTube video that literally walks people through how to do this. But I'll just summarize it here. So the idea is that you let the data tell you when it's time to move up. So at a very basic level, what you're trying to do is let the pressure increase incrementally. So that would be sizing up slowly. You know, not jumping in like with everything from the outset, but also then creating milestones of when the data tells you you're ready to move to the next phase. So let's say trading on sim is a phase. And then when you've traded on sim, I'm just going to make up, examples. Obviously, it would depend on the person. For say 6 weeks in a row where you followed your process, and you would make this all very concrete and measurable on at least 5 out of 6 of those weeks, and you're overall green and profitable. So, you're creating these milestones, like check boxes. When you've hit that, then that's the signal to move to the next phase. And then you've predefined what that next phase is. So maybe it's that you trade live, but you're trading with one contract, and you've extended the time period. So maybe this time it's 8 weeks that you have to see consistent results, and you define what those results are. And then when you hit that mark, you move to the next one. So it's like a strategic approach that you predefine. So you might define up to about 4 phases in advance. And then you just work at it until you pass. So it's like passing the checkpoint, and it takes the idea of time out of it, because it really isn't based on time. It's based on results. So rather than saying in 3 months of trading, I'm going to increase my number of contracts to whatever, you're saying when I pass these checkpoints, then I'm ready to do that. And if it takes me 6 weeks, or if it takes me 6 months to pass that checkpoint, once I pass it, I'll know I'm ready for the next phase. So it's very strategic and practical.
So, okay, but we're stepping up, right? We're ramping up our size.
Slowly, slow increments. Yeah.
Right. But what happens a lot of the time is traders get impatient. All right, I stepped it up once. I'm not going to step it up to level 2, level 3, level 4. I'm going to go to level 10. I'm just ready for it. And that's a very common mentality, I think.
Yeah. And again, understandable. People are putting a lot of effort in. They want to see results. But it usually actually when people are ready to do this phased approach to scaling up, it's because they've tried it the other way and it's not working. So they've bounced from sizing down or small size to sizing up quickly, and then they're going on tilt, they're over trading, they're losing a lot of money, then they go back, and then they're in a cycle, and then they go, okay, this isn't working, I need to do it a different way. So with the traders I've worked with, it's usually that they've tried it the other way, and then they see that isn't working for them, and then they're ready to take a different approach to it. And it does require more patience, which is challenging. But I think when you can see the results, when you start to see your overall profitability, for the year improving, when you do it in this slower, like tortoise hare type way, in the tortoise way, I should say, then that's an incentive to keep going with it. So if you can stay patient enough to see that it's actually providing better results than doing it the other way, then that will feed on itself and you'll be motivated to stick with it.
Got it. Now, so we're way off script already. Let's try to get back a little bit onto the script about losses, right? How to deal with losses. So I have I have a funded account, and I have this cold streak. I just a couple losses in a row. Now I'm a little discombobulated in my head. Yeah.
So, like I said, dealing with losses is one of the biggest skills to work on from a trading psychology perspective, and before you even have the process for dealing with losses, which I'll talk through in a second, it's really helpful to understand that losing is not the problem in trading. You actually have to be able, and we talked about this last time, you have to be able to accept that there will be losses, and that doesn't define you as a trader, and it's part of the game. I think the very first stepping stone in being able to recover well from losses is understanding that they'll happen and accepting that they'll happen. And that is a major challenge for a lot of people, to actually rewire their thinking around success, to say it's okay if I lose. Like, a losing trade doesn't mean that I'm going to be a terrible trader, or whatever other significance that you place on losing. You have to rewire your definition of success. But then past that point, so let's say that you've accepted losses are going to happen, then the skill becomes bouncing back as quickly and effectively as possible. So not letting the one losing day impact you for the next 5 days, or a losing trade even impact you for the next 4 trades. You want to be able to reset to neutral as quickly as possible. So there's a really simple 3-step process that you can follow. And it's going to sound so simple that it will nearly sound ineffective, but I promise you that a lot of traders are not implementing this in the way, like consistently in the way that would bring results. So even if it sounds very simple, I'll talk through it if that's, you happy for me to just go through it? Okay.
Yeah,
So,
for sure.
okay. So step one with it is just understanding what happened and identifying the learning. And I'm sure that people have, all heard of this. Even when you come up against a challenging time in life, if you can identify the learning, then you're developing a more optimistic, resilient mindset around dealing with that challenge. So
let me just chime in real quickly on that one.
Yeah.
So, as an example, me and Tom in the morning, we look for a trade setup idea. We implement a trade. Sometimes it's a good trade, sometimes it's a bad trade. And then we have a thing called lessons learned, right? We look back and say, what did we do wrong? What could we have done better? Is that kind of what you're talking about, learning?
Yeah, exactly that. So you're actually like forensically analyzing it and you're saying, where did I go wrong? What was it that caused the loss? And sometimes it will be that I did nothing wrong. I followed my process and, it was just a losing trade for whatever reason. And in that case, you've literally done nothing wrong. You've done everything right. And you couldn't control the outcome. Sometimes you'll see that you did do something wrong. Maybe you got in slightly too early, and then you're able to also say, oh, that's because I was feeling impatient or FOMO. And then maybe you can also identify that actually I got less sleep than I normally would last night, and that was making me more emotional. So you can literally build a picture of the triggers that led up to this event. And when you can do that, if you systematically implement this process, you'll start to see patterns. So it could be that actually, if you fix your sleep issue, you'll be losing a lot less trades because, you'll be more able to stick with your process. So that's kind of going a bit, into more additional information, but take the learning. So you're identifying, like, write it down, what went wrong, and all of the different elements of it, from a pure technical perspective to a psychology perspective, everything. And then step two, so once you have all of that information and you clearly understand, was it something you did? Was it just the market? What happened? The next step then is to create an action plan. So even sometimes people will stop at just understanding what went wrong and kind of tell themselves, okay, I'll do better next time. But that actually isn't enough to change behavior. You really need to be very focused, like laser focused on creating an action plan to make sure that those events don't happen again, so that you're preventing a loss like that in the future. So, for example, if it was that you were impatient, there was FOMO, you entered too soon, maybe your action plan is next week, I'll set a performance goal that like 90% or higher of all of my trades, I enter at the exact right point. So again, we're not saying I'll win all of the trades. We're saying that I'm going to address this early entry. But you might also have another few action points out of that. So it could be, I was feeling FOMO because I was listening to the chat and I was seeing people taking trades that weren't in my playbook, and that distracted me. So maybe you're saying, okay, well, for X amount of time, I'll tune out of the chat, while I'm trading. So very, very simple, very straightforward action points. But the key is then to actually hold yourself accountable to implementing them. So I would say, like, make just a goal for next week, and then track it. So actually track it in an Excel file. Don't do more than 3 action points because you'll be overwhelmed. And then make sure that you actually stick to that and you implement it. So
hang on real quick. So 3 action points, meaning, all right, I entered bad, I exited bad, I had too much risk, something like that.
So that, well, they would be the learnings. The action points would be, for example, the performance goal of, okay, 1 action point. Okay. Next week, I'm going to set the goal that, let's even say it's 70% or higher of all trades I enter, according to my plan. So that would be an action point. A second action point might be, I get at least 6.5 hours sleep every night before I trade. That's an action point that will help, prevent that situation from happening again, with the example that we used. So they're very specific, concrete things, and they're measurable. That's the key. And that you write them down and you actually track how you fare against those action points.
I got it. Got it. Okay.
So then the third part of the process is the trickiest one. Not tricky, but it's a bit more in depth. So what I've seen with losing trades is that sometimes traders get stuck on them for years. So there's some traders who have had a loss like 2 years ago that's still playing on their mind subconsciously, still impacting how they trade. And they're still in their heads trying to make up for that loss years later. So it's not something that they enter a trade and they're thinking, okay, I have to make up for 2020 here. But it's sitting there in their subconscious mind, and it's driving them to maybe overtrade, revenge trade, go on tilt if they take a loss. So it's like all the losses compound from an emotional perspective, and then they're always carrying that on their shoulder when they go into the market. So it can happen on that time frame, or it can also just be that the loss that you had yesterday, the red day, is impacting how you trade today. So in either situation, you're going to want to detach emotionally from what I call the emotional hangover of the loss. But just to make the point that it could be something that's a hangover from 2 years ago as opposed to, yesterday. But the idea is that even if people go through the first 2 steps, which a lot of people probably do, it's quite cerebral. It's a mental getting over a loss, but that doesn't mean that the emotions of it are also released from your body, and the emotions can drive your actions. So the best way to kind of get over that is to actually feel the emotions related to the loss. So I'll just talk really quickly through a process that you can use to do this part. Might sound a bit out there to some people who aren't used to meditation, but it is a really effective thing, and you could get better at it with practice. So the more that you try to implement this, the more effective it will be for you. So the first step is to actually name the emotion. So often there's an overriding emotion around a loss. It could be shame, frustration, anger, some sort of feeling. And if you can pinpoint exactly the overriding feeling around it, then you're already part of the way there to releasing it. So you pinpoint that with words, you actually articulate what the overall feeling is. Then you—
So I'm sorry to interrupt. This is all great. Could the feeling be mad at myself for
100%.
doing that?
Yeah,
Okay.
yeah, exactly. Like anger, frustration, mad at myself, even, disappointment, like could be a range of emotions. So, but you're trying to figure out the overriding one. There's usually one that's stronger than the others. And then you locate that in your body. So let's say it's anger at yourself. So you would actually close your eyes, sit and just like scan your body, tune into your body, and try and figure out where that is being held in your body. So you might experience it like tightness in your chest. You could feel your fists are, tight. You're kind of closing them. Maybe it's tension in your jaw. And so you actually locate the place where your body is feeling or holding the emotion. And then you allow yourself to fully immerse yourself in that emotion. So instead of pushing it away, which most people do, they're trying to like detach from it, numb themselves. An example of like going on tilt would be trying to numb yourself from an emotion. You just completely detach from the consequences and you—
Well, yeah, that's where the vodka martini comes into place. But
100%. Yeah. So the flip of that is to actually consciously immerse yourself in it and be like, I'm going to feel this. And it's like an electrical charge. So once you actually go into it and you focus on it and you let it get bigger and you accept it, you just sit with it, it's like the charge dissipates and leaves your body. It's just the best way of describing it. Might be the most scientific, but you're kind of sort of like holding it there, and it continuing to charge. You're actually going into it and then you're just releasing it. But then another part, one of the most important parts of that process is also to actually ask yourself, what is the significance that I'm placing on this loss? What am I telling myself that this loss says about me? So in the example that you've used there about being mad at yourself, it could be, I'm telling myself that this means I'm never going to make it as a trader. So you're making some wild, generalization, or your subconscious is based on one loss. And that's what's triggering this whole host of emotions. So if you can write that down on paper and actually, look at it with cold, objective eyes, you'll see that typically in 99% of cases, it's not true. It's objectively not true. It's something that your mind has twisted and placed extra significance on. And that's what's driving the behaviors, like say the breaking your trading rules, that are resulting from the loss, rather than the actual, okay, I've had one loss and it doesn't mean anything in the biggest overall scheme of things. So if I just recap that quickly, because I know we're running out of time. So step 1, identify the learning. Step 2, create the action plan and also hold yourself accountable to it. So track how you fare against it. And then step 3 is go through a process to cure the emotional hangover. And it works every time, and it will help you reset to neutral after any trade.
Here's why I love talking to you. Not only are you giving me trading advice, you're giving me life advice, right? Like a lot of these techniques are going to work with everything in your life, right?
Absolutely, yeah. And it is interesting when people focus on the trading arena and they use these techniques, they often find that it improves other areas of their life, because we're all, it's the same brain that brings the same challenges to the trading arena as to other areas of your life. So that's a nice added bonus and motivation to work on your mental edge.
Awesome. So let's talk about you for a second. I have your website pulled up here. right now. I'm going to put this link into, send it over to Mission Control to put it out in the chats. This is clearly you. This is your website, right? Create a
Yes,
Performance.
Yep, creativeperformance.com. And so there's a free masterclass there. So if people want to dive into, especially this overcoming losses topic in more detail, there's a free masterclass there with some resources you can try out as well.
Awesome. I'm definitely, I didn't do it yet. I'm going to do it for sure. I really appreciate your time today. I know it's a little bit later in the afternoon for you, over
Not
across
too
the
late.
pond.
We're just 4 p.m. now. We're not too late, but thanks
Awesome.
so much for having me.
Well, I'm going to encourage everybody to reach out to you, and learn more about what you do. Appreciate your time today. Looking forward to seeing you again.
Thanks.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.